Yeah, just give it a couple of minutes for people to stream in here, right? While I figure out this. Okay. Keynote. Let me see if you guys can see this. All right. All right, guys. It seems like I can't share my keynote and stuff, but don't worry. Right, I'll be sharing my screen with you. And today's session, right? What we're gonna do is today's session. What we're gonna do is we're gonna dive into a strategy clinic session where we're gonna practice practice the analysis live together. So if you have any questions, right? If you have any questions, or you want me to look at a particular kind of strategy that you guys have, right? So it might be some kind of moving average crossover strategy that you have, or stochastic RSI, trend lines, channels, Fibonacci, right? We want to take this session to actually share with you, give you my insights on the on your approach, right? At the same time, what I'll be doing is I'll be sharing with you some of the strategies that we use, right? High probability kind of strategies where our hit rate is pretty high, right? So our hit rate is pretty high, and uses a lot more of Fibonacci, uses a lot more support and resistance, a lot of trend lines, channels, Ichimoku, right? And I'll just be taking this session to run it by you, right? Show you and show you how we do it. All right, so it's quite a simple session. I want to encourage you guys that if you have, right, if you have uh, you should have access to the comments, right? So if you're watching this, whether it's on YouTube or on Facebook, right, just feel free to send in your comments, right, and your questions. I have literally another screen open here just to monitor the questions that come through. All right. So without further ado, I'll be sharing with you a couple of analysis. Rather, I'll be running it through, running the entire analysis through you guys, and to show you how we come out with some of the slightly higher probability setups. All right, so I'm going to share my screen with you right now. It's a window. I'm going to share this. All right, here we go. So so this is the analysis you have. Just give me a second. All right, so this is the analysis that we have. I'll be showing you how I run through all the different analysis, how you can do a higher time frame to a lower time frame kind of analysis, right? And then through there, how you can find different kind of trading opportunities using correlations, a couple of stuff like that. All right, so this is DXY dollar index. I'll be sharing with you what we expect on dollar index, what we expect on dollar yen too. Right? So a couple of nice setups over here. Well, the dollar index, right? It defines the entire strength of the what's the word for it? The dollar. So it's a good gauge for us to use. And what I like about what just happened on the dollar index is that, first and foremost, before I dive into any analysis, right? I like to go. We do this thing called a top-down approach, right? So we start with the 1 day time frame, right? A 1 day time frame, and we work our way down to hours and maybe even to the 1 hour, right? But it'd be foolish to jump into the 1 hour time frame without knowing what's on the 4 hours and what's on the daily. Now, the trick when it comes to analyzing, right? The trick when it comes to analyzing is that you have to analyze within a realm of sensitivity. Okay, meaning that, you know, if you are on the 15-minute chart, right? If you happen to be scalping on the 15-minute chart, it doesn't make any sense to look at the the 1 month chart, right? Because what you see on the 15-minute chart will, you won't even be able to see it on the 1 month chart, right? So it's very important to factor in the time sensitivity, right? So you try to look at, when it comes to time sensitivity, you look at one time frame up, a one time frame down, right? So if I was at the 1 hour chart, no, I was at the 4 hour chart, I would probably look at the 1 day time frame and the 1 hour time frame, right? So if I was on the 1 hour time frame, however, I would look at the 4 hour time frame and maybe the 15-minute time frame. Easy way is to times 4, divide by 4, right? So that's a good gauge for you to, when it comes to using, when it comes to uh, doing a top-down approach, right? You don't need to do all the time frames. You don't need to do 1 minute, 5 minute, 15 minute, 1 hour, 4 hour, 1 day, 1 week, 1 month, right? That will just give you analysis paralysis. All right, you got HQ Visions. Hey, nice to see you, man. Right, thanks for tuning in. Right, it's part of our private webinar series that we're doing now with Vantage, where we're trying out YouTube Live among a couple of other streaming softwares that we have. So yeah, if you're tuning in here, I can see your questions. Right, thanks for sending it through. Right, but yeah, so let me show you when it comes to the dollar index what I'm looking at. All right, so if you look at the 4 hour time frame, it just looks like it's on this massive uptrend, right? So what we like to do is to go into the daily time frame, right? Kind of zoom out a bit, right? And when you zoom out, then you realize that okay, it is on an ascending trend. That is without doubt. It's on an ascending trend, and it might have reacted off this key level here. So I'm just going to draw a retracement. I don't think it reacted off any key level, right? But no, it is 78%, nothing much over there. But it's worth noting that there is no big resistance beyond this level over here, which is quite far away, honestly. The 102, the 10, rather the 103 level is pretty far away from here. Okay, now I throw on the Ichimoku just to get a gauge on the charts. Right, it look like it's it's very strong bullish ascending trend, bullish trend, right? There's no doubt that there's this ascending trend line. Could it be a channel, right? Could it be right? It's something like a channel. In fact, it's a little bit too bullish to be a bullish channel, if you know what I mean, right? It's a little bit too bullish. It looks like it broke out of the bullish channel even more, which is what kind of scares me, right? Because that shows that there's so people are very familiar in this kind of channels when price breaks this channel and it goes down. Not many people are familiar with the concept of price actually making a bullish exit from the channel, right? So that is slightly different. Okay, that is slightly different because in this kind of cases, it actually shows that price might be, especially in a steep ascending channel, price might be exhausting itself, right? It's hard for imagine if you're climbing up a hill, right? You're climbing up a hill. If the hill that you're climbing up is like this, right? You're taking steps up. It's pretty simple. If the hill is like this, it is you climb up and it's tiring, right? It's tiring. You might need to slow down a little bit. And if the hill that you're climbing up is like this, right? And you can imagine it's very, very tiring because each step you take, right, it's the gradient, right, is just so much higher, right? Gradient is so much higher and can be very tiring, right, to climb up such a steep slope, a steep hill, right? So you must think about it in that way too. When you have an ascending channel like this, right, it takes a lot of effort for price to already be climbing up, here. Now, if it tries to within the channel, you start to notice that it has broken out of this, especially ascending channels. When it breaks out of this, it meant that it required price to go to. Oops, I clicked on something, right? And you go back to the 1 day chart. Give it a second, right? It means that it required price to go a super steep climb, right? Super steep climb. I think somewhere here, right? This is not easily sustainable, right? Because this super steep climb, I just want to remove a little bit of my drawings my brush drawings because it's a little bit too many of them, right? So this super steep climb over here, right, allowed price to break out of here, and every time this happens in a ascending channel, we are not that confident that price will just shoot up all the way, because for it to climb up at this angle within a broader kind of channel means that the slope that it was climbing, I'm sorry, the slope that was climbing, instead from here you go full on like this, right? So imagine you're climbing, and then you go full on, you climb even higher, right? And that honestly is not easy. Okay, that is not easy, and that's why price tends to see that little bit of exhaustion whenever this kind of moves happen. So for ascending channels, right, the key thing that you kind of want to look out for are for bearish breakouts, right? It is very rare that you look for bullish breakouts in ascending channels. And the same thing is true, right? You see a bearish channel, right? It is better to look for bullish breakouts over here, right? That means, got price going here, and then it breaks out from here, right? It's better to look for bullish breakouts than to actually look out for bearish breakouts within a bearish channel. So there is one key point to take note of when you're looking at channels, right? And when you're playing them. All right. Anyway, guys, for those of you guys who just tune in, today is a strategy clinic brought to you by Vantage Markets. So what I want to encourage you guys to do is that if you have questions on your strategies, if you have been using a strategy that you are not too sure about, you want a little bit of clarity on, right? Feel free to send it through in this comment section, right? Just a little bit of background, right? Because my keynote slides were not couldn't be shared with this Mac permissions thing, right? But just a little bit of background, right? My name is Desmond Leong. I run the award-winning research firm, Everest Fortune Group, right? 2019, 2020, 2021, best FX and best equity finalists for best FX and best equity research. All right. So we usually advise the institutions and help them forecast where the markets are heading. But we have a special partnership with Vantage Markets where I bring you guys the good stuff, the juicy stuff, the stuff that will take your trading to the next level. All right. Okay, so you got a question from Rody. So is the only way to trade channels just looking for breakouts? No, that is not true. There are many ways to trade channels. So usually in channels, in this case, right, it is better to play the common way. The common way is to actually play the tops and play the bottoms. You buy off support and you will sell off resistance. Now, for a channel to be considered a valid channel, right, you need 4 touches, minimally 4 touches. Okay, 2 at the bottom, right? So you need minimally 4 touches. I'll show it to you over here, right? Why do I consider this a valid channel, right? Even though it kind of did a little bit of a breakout over there. Why this could be considered a valid channel is because price touched once here, twice here, 3 times below, 2 times on top, right? So 5 times, right? You minimally need 2 below and 2 on top, right? So that'll give that only then can it be confirmed as a channel. Otherwise, you could just be trading a trend line, and you could be trading some random line. So channels tend to be pretty reliable, right? And channel breakouts are a little bit trickier to play. I'll be showing you how I made a call on euro dollar earlier, right? It worked out pretty well. I can try to find a video on it. Let me see if I can find a video on the euro dollar breakout. All right, here it is. No, this was yesterday's one. Right, let me find today's one. Okay, this was on euro dollars breakout yesterday. Okay, so I'm going to show you hey guys, welcome back. How do I hide this thing? Yeah. Okay, yeah, so this was a trade I was calling on euro dollar, right? So what I was doing is that we're playing a breakout. It was something like a channel breakout. All right, you can see a breakout over here. You can see price, right? You can see, I'm going to see if I can go theater mode, right? You can see price broke out of this ascending support down here, and it broke out of this descending resistance, right? And at the same time, you know, it's breaking out of this 23% retracement. So when you're looking for this kind of trade setups, right? The important thing to look for is confluence, right? I want to emphasize that again, confluence, right? That means you don't just trade because there's a channel breakout. In this case, I trade because there was something like a channel breakout, right? I could have easily drew a channel over here, but not only channel breakout, but it also broke out a key overlap resistance over here. So the idea that we're doing is that, you know, go for buy entry, right? With this breakout, wait for price to do a little bit of pullback and to shoot up towards a 1.0925 level. I think I highlighted it right at the end. Yeah, I highlighted right at the end that this was a move that we're playing. You can see how it looked like on euro dollar, right? I am actually thinking of calling it a bearish drop on euro dollar, but let me zoom in a bit. You can see how yesterday when we were calling for the move up to 1.0925 over here, right? You can see it went up to 1.0925. That is exactly what it did, right? It broke out of this. Where is that thing? It broke out from here, right? Broke out from here. It broke out from the overlap, right? And it pushed up to there. It kind of rocket up to there, right? So that's the trick, especially like in this case for dollar index, right? If you were to try to play a move on it, right? You try to play a move on it. It's not enough to just play price breaking out. It has to try to line up, preferably. I'm going to say it over here, right? It not only needs to be a channel breakout, right? So it not only needs to be a channel breakout, you need to look for key kind of support and resistance levels too, right? And then if you can, you throw in Fibonacci. Okay, a good quick thing that you can throw into, right, is actually this thing called the Ichimoku, Ichimoku Kinko Hill, right? So it's a good way to confirm, right? So if price, for example, if price breaks the channel at the same time, you know, it broke a key resistance, it broke a key Fibonacci, and it broke a key Ichimoku level, that could trigger the move, a much bigger move. I'm going to see if I can find some examples for you in a bit, right, for that. All right, we got Solomon. Solomon asking if this channel can be a bump and run. Bump and run, I'm guessing, you know, do you mean that it kind of tries to shoot out a bit, right? And then, okay, what does a bump and run exactly refer to? There are a few definitions of that, right? So, are you saying that, you know, it is going to try to run upwards, or is it going to run down, right? Two big, important considerations. Okay, I do notice that price is coming down now, and I like to actually jump into the 4-hour charts. Okay, 4-hour charts, and again, roughly give you a gauge on what I expect might be happening. Okay, so it is clear. It is clear that price has broken this little ascending support line, right? It is testing this Ichimoku, right? Now this is what I like. Okay, so I like is this support level over here. Why do I like this support level over here? Why do I like this support level over here? It's very simple. Okay, this is what I call in technical analysis, you call it an overlap, overlap support. Price reacted once, reacted twice, reacted 3 times. Okay, now let me explain to you the psychology of an overlap support. Okay, so at least, you know, when you're watching this, right, you can take away a little bit of the understanding behind how an overlap support works. Okay, and why does it work, right? So 3 times over here, what tends to happen is that I'm just going to do a replay over here. I'm going to do a replay over here. So what happens is that for everyone who was looking at the dollar index, right, when price comes up here and tests this, what do you think they're going to do? What do you think they're going to do? Do you think they are going to buy, or do you think they're going to sell? Russell, no, not really. I will not use a Fibonacci channel. I will use Fibonacci retracements, extensions, projections, and expansions, right? But I will not use a Fibonacci channel. I will show you the different meanings behind them. Maybe I think I have a website that actually shows you, breaks down the different kind of Fibonacci levels, right? Rody, I'll get to that in a bit. All right, so yeah, so price comes here, price comes here now, right? And there's what's likely going to happen is that a lot of people are thinking that price is going to drop, right? Because after all, price has failed once, failed twice, failed 3 times, and is back here on the 4th time. What they will be expecting to do is that price is likely going to reverse. Okay, it's going to reverse, and from there, let's kind of just zoom forward bit by bit, right? So when price actually doesn't reverse and starts to go up, now what happens here is that those people who were initially short on this, they're holding on to their positions, right? They're holding on to their positions and they are having the worst time of their life. All right, they're having the worst time of their life, right? Their prices going up further and further, right? And they're starting to question the meaning of life. They're starting to question, thinking that the market is against them. They start to curse trade management. They're having nightmares, all that stuff. All right. Then you can see as price down, right? As price starts to come back down, close to there, what actually happens is that these people who were short on their position, right? Who are short on their position over here, right? What do you think they're going to do, right? Do you think they're going to add more to their position? No, they're not going to. They're not going to add more to their position. They're going to get out of their position. They're going to thank their lucky stars. They're gonna have finally a good night's sleep because prices went back down to break even, right? And they're going to get out of their position over here. Right, they're going to get out of that position, and that is why you always notice that price tends to bounce up when it reaches this thing called a pullback level, right? It's because all those people, the more times price actually reacted off a key level, as you can see over here, and when it finally doesn't manage to react off a key level, there's a whole bunch of people who are being taken for the time of their life, right? And when price finally pulls back to it, right? With price, I'm going to show it over to you over here. When price finally does pull back to this level, over here, when price finally does pull back to this level, as you can see over here, that's where it kind of takes off. All right, so that's the psychology behind an overlap support, which is pretty good if most of you guys can try to observe it a little bit more. Right, you start to notice, for example, it happens in many, many different places, right? We can just eyeball, right? And you can see that price. Well, another example is over here. You can see that this was a very big reversal, right? So what happened is that what I like about this is that you can easily analyze the psychology of using candlestick patterns, right? Massive reversal from here, right? Massive reversal from here because previously, right, when price was from over here, right, you can see that when price shot up to here, right, imagine this big drop, right? When price finally kind of climbs back up again, right, a massive short selling, come back up, massive short selling, right? Come back up, massive short selling, right? So it's people are thinking that, wow, this is a pretty awesome place. It's a pretty awesome place to sell from. Okay. Of course, what happens after that is that when price finally breaks up from it, right? All those people who were thinking that price is going to short, was going to drop, shorting over here, they're suddenly being taken for the time of their life. They're taken out here, right? They see price rise up here, and they are thinking, "Oh man, this is bad, right? This is really bad, right? Price away, I'm gonna get margin called, right? I didn't use a proper stop loss, as most retail traders wouldn't use a stop loss, right? And what happens is that when price finally comes back down to here, right, you can see, right, the moment price touches this, everyone who was short at this level over here, they just get out of their short positions. To get out of your short positions, you need to buy, right? And when that happens, that's where you see a big, nice bounce, as you can see over here. So that is one of the key things that I want to share with you guys when it comes to looking at technical analysis, right? Especially support and resistance levels. It's important to have a good foundation, right? It's important to have a good foundation when it comes to technical analysis, and this is something which you can immediately implement in your trading, right? Immediately implement in your trading to find very, very nice, what I call, this is actually the technical term for it. It's actually pullback resistance and a pullback support. right? You're waiting for price to make a pullback, and once it pulls back to the original level, you just go in the original in the other direction. Okay. Now, let me just look at some stuff that maybe are a little bit higher probability in terms of the trading setups, so I can share it with you guys. All right. Let's see. Nothing much goal, right? If you have a request, please send it through, right? I'll see how I can kind of look at it. Look at it for you guys. Let me try to find a nice little setup for you guys. Okay. Could be a decent setup. Probably not here. Right. I'll just cycle through the charts a bit, and I guess if you can, try to look at the approach when it comes to finding these key levels. Okay. So the one piece of advice I'd like to give you is that when it comes to trading, right, it's not only about finding the right trades. Okay, we got Rody asking for Kiwi dollar. I just happen to be looking at Kiwi dollar here. I'm going to show you how I analyze it. All right. So when it comes to trading, right, it's not only about trading everything, right? It's about knowing when to sit out of trades. So sometimes people are trading goals, right? They have a target that they have they want to make 50 pips a day, or they want to make 100 pips a day, right? And that is where that is the flaw when it comes to trading. That's the flaw when it comes to trading, right? That you cannot have a fixed target when it comes to how many pips you want to make on a daily basis. The reason for that is because you can only trade what the market gives you. Imagine if it's a weekend, it's a Saturday, it's a Sunday, right? You would not dream of even having making any trades, taking any profits on a weekend, because while the market is closed, basically there's no liquidity at all when the markets are closed, right? So based on the same kind of definition, if you are in a period of, if there is no liquidity in a day, the markets are moving really slowly, right? Then that you don't need to try to force a trade out. You don't need to try to take profit. You don't need to try to hit that target, right? You are at 80 pips profit in a day. You want to try and make that last 20 pips to hit 100 pips, but that will end up causing you to compromise on your trading strategy. All right. So because you're in that sense, you're trying to squeeze out trades that don't exist, right? You don't try to squeeze out a trade on the weekend, right? Because the markets are closed. The same thing is true when you're trading and you're in a period of low volatility, right? Maybe it's a holiday season, right? Maybe it's in May, right? For example, May is coming up. The markets might be slightly slower, and so what you want to do is, if there are days where there's no movement, don't try to force a trade. Okay, remember, as much money is made knowing when not to trade versus knowing when to trade. Okay. Anyway, let's look at Kiwi dollar over here. All right, let's look at Kiwi dollar. I'll show you how I break it down. Look at the analysis. Now, first thing I noticed about Kiwi dollar, okay, that be a nice little channel that we're seeing over here. Okay, I then move this into a bullish channel because price is broken out of it. Why is this a channel? I'm showing it to you. Price is reacted off once, reacted off another time, right? It's bounce off once, right? Bounce off a second time. So there are two at the bottom and two at the top, right? So it is a valid channel. Now, this movement here means it's a channel breakout. Okay, it's a valid channel breakout, bullish channel breakout. So it's good stuff, right? A bullish channel breakout. I do want to highlight one very nice movement. Is this little movement here? It's a double bottom that happened at a pullback level. Always notice, right? Same thing, imagine this was a big level. Everyone coming down thinking, thought that it was going to bounce again over here. It didn't bounce. It went all the way down. So the moment price made a pullback to here, everyone got out of the trade and it went down, right? So it's exactly what I shared with you earlier on overlap support, overlap resistance levels. You will notice it in many different ways in the markets, right? So just keep an eye out for it when you're trading. All right. Now, double bottom. All right. This little nice little breakout over here that has happened. Price made a pullback. What can we expect now? Let me just take a look at this market. For those of you who are interested in Fibonacci Elliott wave, right? The key Fibonacci level you want to look at first is 23%. 23% is the first key level you need to look at for price to break, right? It's the first key level for price to break to trigger a bigger move up to 38%. Okay, very important consideration there. 23% retracement is always the first level to break to trigger a move up to 38, right? It borrows a lot of this theory wave, right? So sometimes people just jump into Elliott wave without considering Fibonacci. Some people jump into Fibonacci without considering Elliott wave. And of course, there are people who go into harmonics not realizing that everything's all inter, right? So one thing I do want to recommend is that if you are going to any of it, you need to master Fibonacci. Okay, price is failing to me is kind of failing to break past this 23% Fibonacci level, right? So that is one consideration. Now, let's see the Ichimoku cloud. So price is also it's kind of facing that little bit of resistance from the Ichimoku cloud, right? So strong bearish cloud over here. It'll be quite tricky to play the move up by. Okay, so I'm just looking at a couple of different kind of setups here. I'm trying to see what I can forecast with this. What can I forecast with this? You could also use this. This is 100%. This bit of 100% movement. 78.6% Fibonacci projections about there, right? I do see there being a fair bit of resistance over here. Okay, a fair bit of resistance over here. So if price really indeed make a nice little push up to here, if price does make a nice little push up towards here, right? I do think it could. So how do you forecast the a good gauge to forecast, right? The profit potential, right? What I do, you just take this, copy, and you paste it, right? And you can see roughly what's the height profit potential this channel might give you, right? Because you technically you can only play the width, right? So the profit potential of this channel breakout isn't that great, right? It does look like it might come out just about to this level over here. Lines up with the Ichimoku resistance, right? It lines up with the overlap resistance. It lines up with the 38%. It lines up with this 78.6 projection. So I do think, right, there's a fair chance that price might come here and then continue down. Okay, this is probably one of the moves that we're looking at, right? Yeah, this is probably one of the moves that I'm looking at. Okay, in terms of resistance though, I really like this resistance here. I know it's a little bit hard to see, right? But after a while, you train your eyes to see these kind of key levels. These are what I call key overlap levels, right? Price reacting nicely once here, price bouncing nicely once, right? And when it does break, it comes back up, it reacts nicely. My best case scenario is that price comes here, touches this key level, and then reversals because it's still within the broader Ichimoku kind of resistance, right? Some things to consider, right? So these are key levels that you can use. And for those of you guys who are interested in the concept of trade management, right? Stop loss placement, take profit placement. What we like to do is that every time you see a big resistance level, it's good to put your stop loss slightly beyond. Okay, it's always good to put your stop loss slightly beyond and your take profit slightly before. Okay, if you've ever noticed that price tends to stop you out and reverse in your original direction, it is because of your stop loss and your take profit placement. Right, I'm going to share with you a little bit over here since it's part of a trading strategy clinic. And as with most trading strategies, we do need to consider stop loss and take profit placement. Okay, now stop loss placement, right? There are a lot of trading strategies out there. there are a lot of trading strategies out there that actually says, let me see if I can find an example. I'm going to put this over here. Okay. And let's just say you found a trading strategy that tells you that the moment price breaks out of a channel, right, you need to have a take profit. All right. Of course, you need to have a take profit, but how much is your how much would your take profit be? Right. So let's just say, you know, you have a long position over here, your entry is over here. Sorry, this is a short position, long position. Entry here, your take profit. You need to have a take profit of 90 pips. Okay, is this 90? Yeah, it's about let's just say your stop loss is here and your take profit is here. All right, you need to have a take profit of 90 pips. Now the problem with that, right? Wait, did I get it right? 67 6780 6871. There's 90 pips. Okay. Now the problem with this trade, the problem with this setup is that if you think that price is really going to all the way up to this level, right? Okay, you know what? Your strategy, the strategy that you found on babypips.com or something tells you that your take profit needs to be on 100 pips. Okay, very nice number, right? So you know this guy with 1,000 posts on his name on Baby Pips or Forex Factory, right? You know, he says that, okay, you know, there's my words of wisdom, right? Whenever you see a channel breakout, 100 pips take profit target from the breakout level. Okay. Now the problem with this, right? The problem with this is that, okay, you know, 100 pips take profit. If you put 100 pips take profit and it comes all the way up to here, right? Just say price is really right and it comes all the way up to here, and it hits this level, right? There's because this is a major resistance level, okay, it's a major resistance level. What is likely to happen is that you've seen it time and time again. Price touches this level and it reverses down, and that is where you start panicking. Is start closing off part of your trade. You know, start getting more into a trade. You know, start scaling it, right? But you know, it reverses right before hitting your main profit target over here. Now, why does that happen? Right, that happens because when price reaches a major resistance level, right, a lot of people are jumping out of the trade. Right, a lot of people are jumping out of the trade. A lot of people are selling, right, and that causes price to move in the other direction. And so if you have your take profit level at a, you know, if you have a take profit level slightly beyond a key resistance level, most of the time you'll notice that price reverses right before it's able to hit your key take profit level, right? And that is the weakness behind fixed take profit and fixed stop loss levels. All right. And which is one thing which I want to teach you guys today. When you are placing a take profit, slightly before, right? Slightly before a key resistance level. You might give up 1 or 2 pips of profit, but it is better to put it slightly before a key resistance level, right? So that price actually touches this. You get out of the trade, you make that money. You don't need to make that little bit of, you know, you got the bulk of the move correct all the way to here. You made that bit of money, so you don't need to, you know, play the move up to here. Okay. And it is the same thing with stop losses. Okay. Let's just say you have a stop loss, right? You have your stop loss over here. You know, this is a major level, right? Let's just admit that this is a big bounce occurred here, another big bounce occurred over here. So your stop loss, right? Where do you put your stop loss? Do you put your stop loss directly at that level? Do you put your stop loss slightly above that level? Or do you put your stop loss slightly beyond that level, right? So when it comes to looking at this kind of strategy, some people, right? Some people, when they're reading the comments, they're just saying that, all right, just put your stop loss. Let's see, what is it? Let's if you see a channel breakout, put your stop loss at 50 pips. Give yourself a 1:2 kind of one risk to reward. 50 pip stop loss, 100 pip take profit, right? So in both situations, it kind of causes your downfall, because in this case, right, when price is dropping, let's just say price drops and drops and drops and drops and drops. Okay, this is what we call a magnetic level. Price bounced once, price has bounced twice. This is a magnetic level. Now, I'm not sure how many of you guys ever played with magnets before, but imagine you have a magnet, right? if you have another magnetic object which is pretty far away, right? So you have a magnet over here. So, oh man, my drawing is quite terrible. But let's just say you have a magnet over here. Okay? You have a magnet over here. Okay, and it's pulling stuff in, right? It's pulling stuff in. Now, if an object is over here, right, the magnetic force is very weak, right? The object is over here, it's slightly stronger, right? And if the object is right over here, you can see it, the price, it gets pulled to your magnet really quickly. It almost kind of just snaps directly to the magnet, right? Why does that happen? Because the closer it is to the magnet, right, the stronger the magnetic pull. Okay, when you see two major bounces over here, these are what you call magnetic levels. A lot of people are looking at that level. So what happens when price drops? It doesn't go entirely according to your trade. It drops a little bit here. The moment it's close to these magnetic levels, it gets attracted really strongly and gets pulled, and then it goes right and touches this level. Now, if your stop loss is right at that level or is slightly before a level, you get stopped out, right? You get stopped out, and then you start cursing the heavens and say, "Oh man, how did the market know my stop loss was there?" It stops you out and then it bounces up. I'm not sure how many of you guys have experienced that, where you just get stopped out and the market moves in the other direction right away, right? The reason for that is because of this stop loss placement, right? So instead of putting it at a 50 pips kind of stop loss distance, you want to put it slightly further, right? You want to put it slightly further, give a little bit more breathing space, so that if the market actually comes and pulls and touches this level and bounces up, right, it doesn't stop you up because your stop loss is slightly below, right? You can see your stop loss is down here. So you do need to give your trade that little bit of breathing space when it comes to trading, right? Don't put your stop loss right at that level, right at the key level. Okay, I'm just going to rehash one more time for you. Take profit, right? Put your take profit before, okay, before a key level, right? In this case, right, we have to take profit slightly before your stop loss, right? You put it after. No, instead I'm going to use two B's over here. Stop loss, you put it beyond. Okay, put your stop loss beyond a key level. Just by using this, it should greatly improve the chances of you trading profitably. All right, guys. So yeah, I hope you like the analysis on Kiwi dollar, right? Let me see if there's anything. Okay, on euro dollar, I'll tell you what I'm looking at for euro dollar, right? Euro dollar, I did a Fibonacci retracement from here down to here, right? We can see price already reacting off the 38%. I'm going to leave the 38 and the 50% retracement. Then I'm going to take a Fibonacci projection. I'm going to take from here to the top here, down back to here, right? We can see 78.6% Fibonacci projection just about over here. Now, what do I notice? Big price bounce over here, big price reaction once, twice, three times over here. Okay, so this is now an overlap resistance area. I keep telling you guys that is overlap resistance, right? So this is overlap resistance. This would be the setup that we're looking at, like a first resistance over here, right? In terms of your stop loss placement, the tighter it is, technically the better, right? So you can actually put your stop loss just slightly beyond, right? Of course, remember, all this is still none of it should be construed as investment trading advice. It's my own views on market, all right? So yeah, please exercise proper due discretion when it comes to trading, right? So this would be the key support level over here, right? Where price bounce up multiple times. This would be the key support that we're looking at, okay? So there's a nice little chance that price might react off this overlap resistance, right? This massive overlap resistance, massive 38% retracement, massive 78.6 projection, right? And, kind of drop down to at least this level. That is the key thing that we're looking at, right? I believe it's failing to properly break out of the Ichimoku cloud. Otherwise, this should be the trade that one of the slightly better trades that we're looking at, playing the move from 1.0920 all the way down to 1.0811. All right, guys, pretty nice setup, pretty clear one, a slightly higher probability, right? So do keep an eye out for it. Okay, anyway, throughout this whole webinar, right? I hope you found this session useful as I shared with you a couple of trading strategies, right? Approaches to trading, right? Stop loss placement, take profit placement, the concept of a channel, right? Concepts of having multiple kind of indicators and multiple different kind of studies to give yourself that confluence of factors that leads to higher probability trades. Okay. What I do want to encourage you guys is to keep a lookout for Vantage webinars. We might be moving to Zoom pretty soon because that allows us to control the registrations and remind us a little bit better, right? So do keep a lookout for that, right? Next week, our dear Cassandra will be coming back, right? She was down with COVID for the whole of this week, right? So she's a little bit out of action. Next week she'll be back. It'll be a fun time where we look at the markets together once again. Okay, that's it from me, guys. Thank you for staying short this webinar. Remember to stay safe, trade safe, and yeah, exercise proper risk management when it comes to trading. All right. Thank you very much. Cheers and peace out. Thank you, Roddy. No worries.